Welcome to Daybreak Australia. I'm Paul Allen in Sydney, where markets have just come online.
I'm Annabelle Droulers in Hong Kong. We're counting down to Asia's major trading opens and the top stories this hour. A sea of red after big tech earnings test the strength of the AI-fueled boom. Revenue from Alphabet's core search business disappoints, as does Microsoft's cloud growth and AMD's forecast. Samsung's results are up next, with analysts expecting another profit plunge, but awaiting any hints of a turnaround in the memory and smartphone markets. And President Biden says he's decided on a response to a deadly attack on US troops, repeating that he doesn't want a wider Middle East war.
All right, let's start with some breaking news out of South Korea. There is industrial production numbers for the month of December, and it's a pretty handy beat as well, growing 0.6% on month. The market expectation was for a pretty tepid 0.1%. Bit of a slowdown from what we saw in November, 3.3% on month, but still a handy beat on year. The figure 6.2% growth, also better than the 5.3% expected. So a big beat for South Korea industrial production in the month of December. Right, let's take a look at how we're tracking in Australia here. We've just opened a few moments ago. Currently, we're off by a few points. We do, of course, have the staggered open here, but is today the day? Yesterday, we got within 2 points of setting a record on the ASX, surpassing, well, we would have surpassed 7,632. Record set in August 2021. But in the early going, looks like that may remain out of reach for one more day. We've seen yields on Aussie bonds grinding a little bit lower, 4.11 at the moment on the 10-year. The Aussie dollar just hanging on above 66 cents US. We will get fourth quarter CPI numbers for Australia later on today. We're expecting to see a pretty sharp contraction there to 4.3%. And of course, it's the first RBA meeting of the year. Next week. We're expecting to see the bank stay on hold, though. Let's take a look at how futures are placed for the start of trade in Japan at the top of the next hour. The Nikkei put on some modest gains yesterday. We're expecting to see a bit of a pullback today to the tune of about 0.2%. That's futures traded out of Chicago, at least. It was a rather mixed finish for US stocks. The yen just hovering around that 147 mark. Chinese futures very narrowly in positive territory, but we have seen Annabelle, those markets in China just continuing to grind lower this week.
Yeah, that's right, and really a big focus on that in PMI data we get out later today. But the focus, I think, of what's going to be leading to the weakness in Asia today really comes down to these numbers that you can see here, because there's been a lot of after-hours reporting today, but the focus very much on Microsoft and Alphabet. Actually, there was a lot to like in these numbers that came out, but investors are focusing on the negatives here. So Alphabet, it's about search revenue, what came out of that. Microsoft as well, that focus on cloud growth, and these numbers perhaps didn't live up to some of the expectations on Wall Street. AMD, another one to track because it gave a weak revenue forecast for the current period, so really similar to what we had to Intel earlier this week. But that's the reaction we're seeing here in after hours. You can see as well QQQ, that's the ETF that tracks the NASDAQ, that is dropping here. But let's change on because we just had futures coming online. And again, the picture here is a bit of weakness ahead of the open. Traders, of course, sifting through those earnings, but you've also got the Fed decision that's coming up. There's Treasury issuance, there's jobs numbers as well, so there's really a lot in the days ahead. But again, Paul, that focus on the tech numbers.
Yeah, let's get a little bit more detail on those earnings from our technology reporter, Jackie Davalos, who joins us now. So, Jackie, let's start with Microsoft, a beat there on revenue and profit. What were the key drivers of that performance?
Well, digging into some of the figures here, the main number we have to look at and the investors care about is that Azure cloud services unit growth. That came in at about 30% compared to the last quarter. That beat expectations. And the company said that about 6 percentage points of this actually came from AI-related services. This is good news given investors were looking for some evidence of those AI bets paying off. Some Other bright points in the report included Xbox revenue being up 61%. That Activision contribution after that deal closed in October really trickling into the performance on the whole. And, the revenue and the productivity in the business process unit, which houses Microsoft Office, also came in higher than expectations. The company, however, did not disclose what those Copilot subscription figures look like, which, as you remember, that has been the big news here. That product holds the keys to how AI is really panning out for the company. Still too soon to say whether or not it's really paying off, but we're going to get some commentary from executives on the call right now.
Yeah, I mean, we know that Microsoft wants to be an AI powerhouse. That's really their stated goal. But how did we see it showing up then in the results?
Well, again, you look at that Azure growth with those 6 percentage points coming from AI-related services. That shows that it's getting some of that impact flowing through. It's still too soon to say what that Copilot contribution is going to look like. But the company said, Satya Nadella, in a statement accompanying results, that, quote, "We've moved from talking about AI to applying AI at scale." So the company is really taking hold of it. Show me the money moment here. But again, it's not really enough for investors so far, with shares coming under a little bit of pressure. It's going to boil down to that outlook. Is this AI contribution going to grow or stay stagnant in the quarters to come?
Well, we saw Microsoft shares dipping after hours immediately after this report, currently just a slightly in positive territory. Why is the market responding this way?
Well, one of the reasons here is that Azure growth has seen some sluggish quarters in previous periods. It looks like it's starting to recover, in part due to that AI-related growth. But investors are looking for a little bit more of a boost. When you think about just how much excitement has been baked into AI, they're looking for a little bit more. We were seeing 50 to 60% growth in the heyday during that post-pandemic period when cloud computing was really on a tear. And that's come down quite a bit because Azure is such a major profit generator for the company. Having this see more substantial growth is a big expectation for the company. Now, there's still a lot yet to be seen in that qualitative commentary that's going to come from the conference call that's going on at this moment. So there might be better news for investors there yet to come.
Where investors are also disappointed today really comes down to those Alphabet numbers, because that stock has been dropping in after hours. So it does seem that it really comes down to the search business.
A little bit of a different story there. For Google, it's that core search business that it's its main financial engine. Now, the company also beat on its overall revenue number. It brought in about $72 billion. Investors were looking for $71 billion. It was also more profitable, bringing in $1.64 per share. But that revenue, that search unit, was $48 billion, just narrowly missing. Now, the reason that's so important, even though it was a small miss, is because it's the biggest profit generator for the company. Some bright spots there, though, for Google. That cloud unit was double more. Its operating profit was $864 million, double what analysts were expecting. Despite that, seeing any kind of weakness in that search unit bodes more concerns for investors who are looking to see stability there.
So what's the outlook for Alphabet going forward?
Well, it has a few things percolating. It's been a little bit slower to the AI game than a player like Microsoft, which is partnered up with OpenAI. The company just released its most powerful large language model, Gemini, in December, and it said that it's going to start incorporating it in some of its more popular productivity tools, as well as its search engine. Now, it's taken a little bit more of a gradual approach because it is a search giant here. It's a little bit more to lose. It doesn't want to off-put consumers from its core products, but it's going to have to show that it has a stake here And it's a little bit harder to see in the figures because they don't break out a specific AI contribution. But what the company is saying is that, look, we've been an AI company for a while now. AI is only going to bolster our business. One of the ways that we can see this really trickle through is that cloud revenue. Is it generating more business from AI startups that are kind of coming into the game as well? Or is it still kind of playing second fiddle to the cloud giants like Microsoft and Amazon Web Services?
All right, that was our Bloomberg technology reporter, Jackie Davalos. Thanks for running through the numbers there. Let's get more on them now with Katrina Dudley, Senior Vice President, Portfolio Manager and Investment Strategist at Franklin Templeton. Now, Katrina, it's pretty clear that these numbers are sort of casting a shadow over the Magnificent Seven, which was the key driver of US stocks really over the course of last year. So how much does that concern you about the outlook then moving forward?
I think when we look at the Magnificent Seven, we think that they're very well priced. And I think the reaction you're seeing in some of the stock prices is a reflection of that they were well priced going into these earnings, even though they've given beats according to analyst estimates. The guidance just wasn't perfect. And so the stocks are reacting as such. As we look at the market, we look at the breadth. So if you look at the S&P 500, for example, there are 493 other stocks. And that's where we see the opportunity in those names outside of that Magnificent Seven.
Yeah, just to get more views on that Magnificent Seven, though, because JP Morgan, for instance, has been warning of a dot-com style concentration in US stocks. Is that something you would agree with?
Yes, we have seen a concentration. In terms of AI, I think that we see a lot of opportunities in artificial intelligence. But let's just remember here that we've had a lot of examples. I've been an investor for over 20 years of companies being the innovation leader and then stumbling. I don't think many people remember Wang, but Wang was a leader in computing and stumbled. So I think that companies are continually having to prove themselves and continually having to prove the value proposition that comes from AI. You've got Microsoft, which is in the lead at the moment, but Google's taking a more deliberate approach to doing this, or Alphabet, in terms of the way that they're introducing it. And I think that at the moment, the jury's still out as to which approach is better.
Katrina, I want to move on, if we can, to the big macro event coming up. It is, of course, the Fed decision on Wednesday, US time. We've had some pretty strong data, but then again, Bloomberg News also reporting a lot of job losses today from UPS, PayPal, Nomura as well. What sorts of things do you expect the Fed to balance here? What's the rhetoric you expect to hear about rate cuts going forward?
I think as we look at the Fed, one of the things we need to continue to remember, it's not just the Fed anymore, it's the ECB as well. They're data dependent and they're really paying attention to the data. And you've mentioned a couple of these data points, which will be important to them. They're looking at the unemployment rate. They're looking at the rate of new hires. They're looking as well at the rate of job loss. And they're also looking at inflation. And they're looking at all of these factors as it relates to the strength of the economy and the strength of the economy on a forward-looking basis based on these historical data points. So from our perspective, I think that the Fed gets a check mark in terms of controlling inflation. I hear the job losses, I feel for the people, but I think that the economy from a jobs perspective is still very positive. So I think that while the market's pricing in around a 50-50 chance of a rate cut in March, I think that that may be somewhat optimistic, that they're more likely to see a rate cut towards the end of the year.
Yeah, certainly consensus seems to be coalescing around May as a possibility for the start of easing. But I just want to know how confident you would feel in declaring victory over inflation and recession averted.
I think in terms of victory over inflation, we've really had to adjust our idea of what inflation is. For so much of the last decade, we've been looking at 0, 1s as an inflation target. Now we're talking about something as a 2 to 2.5 as being declaring victory. I think that the Fed wants that number between the 2 and the 2.5 before it starts patting itself on the back. You've got some of the housing data, which is showing, the rental income numbers are starting to show a little bit of tempering. That's going to help. And so I do think that you can get the number down into the 2.5 2% range. At that point, however, I'm not sure it means that the Fed needs to cut. I think what it means is the Fed, at a minimum, can hold where they are at, and then they can continue to watch that job number. And if they start to see job losses tick up, then they can stimulate the economy with a rate cut. But I do think that May, as I said, March is 50-50. I think that May is still a little early.
And now, in terms of opportunities in Asia, I know that you're bullish on Japanese equities. You're certainly not alone in that view. But do you see that strategy changing in the coming months as the Fed inevitably starts to ease and the Bank of Japan inevitably starts to move away from zero rates?
I think that the drivers of Japan and our bullishness on Japan as a stock market are really, supported by the rate outlook and obviously the normalization of policy, but it's really supported by some of the moves that have been taken by the regulator to encourage their companies to become much more capital efficient, to become much more capital friendly and much more shareholder friendly. And that's a really big change in the regime. And if we take a look at some of the Japanese equities, while on the headline basis you may think you're paying expensive multiples, many of these companies have returns on equity that are significantly below their counterparts in the rest of the world. So we think that there's an opportunity in terms of arbitraging between different markets, and being a global investor gives us the opportunity to do that and to buy those franchises in Japan that have earnings potential that is also supported by the market.
All right, Katrina Dudley, Senior Vice President, Portfolio Manager and Investment Strategist of Franklin Templeton. Thanks so much for joining us. Still to come, Samsung expected to post its fourth consecutive quarterly net income decline while laying out its semiconductor and AI outlook for the year ahead. We're going to dive into the earnings that are due later on this hour. But first, President Biden says he's decided how to retaliate for the deadly attack on U.S. forces in Jordan, as the White House hints at multiple actions over time. Details next. This is Bloomberg.
Do hold them responsible in the sense that they're supplying the weapons to the people who did it. I don't think we need a wider war in the Middle East. That's not what I'm looking for.
President Biden there speaking with reporters after an attack on U.S. troops in Jordan earlier this week killed 3 soldiers. The president also says he's made a decision on how to respond to that attack. Let's get more now from our national security reporter, Anna Edgerton. So, Anna, what factors is President Biden weighing in deciding how the U.S. is going to respond?
Well, it's a very tricky balance between deterrence and escalation. The primary goal, of course, is to deter these militant groups and their Iranian backers from launching this kind of attacks on U.S. interests in the region, while also avoiding a wider conflict in the Middle East. So to that effect, the Biden administration has said from our reporting that they need a stronger response to this kind of attack because of the loss of American life. However, it's not clear that they're ready to agree with congressional Republicans who have said that it's time for strikes directly on targets within Iranian territory, which of course would risk broader escalation. This is taking place during an election year in which gas prices at the pump for American consumers also matters, as well as American wariness with military involvement in the Middle East.
Where does this sort of response from Biden, or potential response, leave Iran then?
Yeah, it's interesting to hear the response from Iran so far. We've heard from officials who have made it clear that they had nothing to do with this attack. We had a foreign ministry spokesperson from Iran saying that they don't have any control over these Islamic resistance groups in Iraq, that has said that they launched attacks in Jordan, although they didn't claim responsibility for the loss of U.S. lives. We're also looking at the Houthi rebels in Yemen, who are backed by Iran, launching these attacks in the Red Sea. But Iran has similarly said that they don't actually control these groups. While they may support them militarily, they're not actually ordering these attacks.
And, of course, all of this appears to tie back to the war in Israel and Gaza, right?
Yeah, and that's one thing that makes this response so complicated for the Biden administration, because on the one hand, they're still standing with Israel, saying that Israel has a right to defend itself, while criticizing the loss of civilian life in Gaza. So, working on getting the hostages home, trying to find a resolution there, while also responding to these attacks where we have the Houthi rebels in Yemen, for example, saying directly that one reason they're carrying out these attacks, snarling the commercial trade through this important trade route, is to push for a ceasefire in Gaza. So while the militant groups see these things as directly related, the U.S. is trying to respond to them each in its kind.
Yeah, certainly something we're tracking very closely. That was Bloomberg's national security reporter Anna Edgerton there. And you can get a roundup of the stories you need to know in today's edition of Daybreak. Terminal subscribers go to DayBgo. It's also available on mobile in the Bloomberg Anywhere app. You can customize your settings so you only get news on the industries and the assets that you care about. This is Bloomberg.
You're watching Daybreak Australia. Here are some of the corporate stories we're tracking. PayPal is cutting about 2,500 jobs, or 9% of its workforce, as rising competition puts pressure on profits. In a letter, CEO Alex Chriss says the decision will right-size the company. Those affected will be notified this week. PayPal was an early disruptor in the payments industry, but rivals have since crowded into the space. UPS saw its biggest share drop since April after announcing plans to cut 12,000 management jobs. It says the move will save more than $1 billion. CEO Carol Tomé says the cuts are possible due to new technologies like AI. UPS expects sales for 2024 to come in between $92 and $94.5 billion, trailing estimates. Jack Dorsey's fintech firm Block will begin cutting jobs as part of a goal to cap its workforce at 12,000. Block declined to give specific details on how many jobs are affected. The company announced the cap when it reported third-quarter earnings in November. Block has been trying to rein in costs to boost profits. And Bloomberg has learned that UBS has cut a group of senior bankers as it continues to reduce headcount after its takeover of Credit Suisse. Sources say several cuts were made last week. UBS's workforce jumped to about 120,000 when the deal closed in June. The bank says it aims to save about $6 billion in staff costs in the coming years. Bell.
Well, Paul, just taking a look at how US futures are faring so far in today's trading. So they've just come online at the top of the hour, and you can see that weakness there, particularly in the NASDAQ futures contract. Now, this is really the reaction we're getting to big tech earnings after the bell. Microsoft and Google parent Alphabet, the particular watch here. We also had AMD, and investors have really been looking at sort of the more negative signals that came out of this. So for Alphabet, for instance, it was that focus on the cloud, and then we also had, or rather the search engine, and Microsoft, that focus on cloud growth as well. These sort of weight, even though Microsoft has since turned positive. AMD as well, a weak revenue forecast, so not something that is being received very well by investors. But what's interesting, actually, speaking of AMD, given it is in the chip space, we just actually had in the last couple of minutes South Korea posting its numbers around chip shipments, and over the course of December we actually saw those rising more than 113%. If you change on Samsung, this really plays into their earnings. We're expecting them the full reading for the fourth quarter just in the next 10 minutes or so. But those chip shipments rising more than 113%. That's the most since 1997. Chip production as well up more than 50%, and that's the most since 2016. So something that is quite positive for the outlook for chip makers in general, and Samsung, a really key one here. We'll also get the breakdown on how its smartphone devices are faring as well. Plenty more to come on Daybreak Asia. This is Bloomberg.
All right, let's take a look at how some of these big tech names are trading after hours at the moment. Most of them pretty weak. Let's start at the top of the board there. Microsoft, it's been whipsawing around after hours, currently off by 1%. So revenue was a narrow beat at $62 billion. There was a narrow beat on cloud as well, but investors do have a few concerns about the outlook there. Alphabet as well, ad revenue miss, $65 billion. That was a narrow miss, so investors really are punishing the company there for that advertising shortfall. And Advanced Micro Devices now off 6.25% after hours. A weak revenue forecast there as well. First quarter revenue expected to be about $5.4 billion. That was well short of the $5.77 billion that analysts were expecting there. So some of those big tech names trading softer after hours. Let's get some more on this with Angelo Zeno, Vice President and Senior Equity Analyst at CFRA Research. Angelo, thanks for joining us. And I want to start with Microsoft if we can. Second quarter revenue beat, cloud revenue also a beat, but we're off after hours there. What were the key takeaways for you?
Yeah, I mean, we're definitely off from, after hours. But listen, I mean, the stock had run so hot into the numbers, and you can say that about kind of most of big tech. That's why we think it's selling off. But as far as the numbers are concerned, I think what most people cared about was kind of commentary on both kind of the cloud and AI side of things. As far as cloud is concerned, I mean, Azure growth of 30% was, I think, modestly above expectations, looking for about 27 to 28% growth. I think also when you kind of look at what the company guided to for the March quarter, stock actually turned around, was down about 2%, actually went positive at one point. And a big reason was the cloud number that they provided. It expected growth again to be about 30% for the March quarter. So that's telling us, that there is kind of increased AI enthusiasm, workloads kind of coming onto the cloud. And, you saw that with kind of the fact that they highlighted 6 percentage points of growth coming from AI services on the cloud side of things. And then they didn't cite much on the Copilot side of things, but they did highlight that it is going to improve kind of the ASP trajectory on kind of their office business here over the next couple of quarters as you see an improving mix towards Copilot here.
Yeah, there are still overwhelming buy ratings on Microsoft from analysts, and I know for you, you consider Microsoft to be perhaps the most magnificent of the Magnificent Seven. Why is that?
Yeah, I mean, listen, I would throw obviously Microsoft and NVIDIA right up there in terms of kind of our favorite plays among the Mag 7 names. And for Microsoft, it's more along the lines of their business model. I mean, they've got the most resilient business model among the group when we kind of think about the growth opportunities tied to them on the cloud, the AI side of things, as well as on the gaming side of things with the recent acquisition of Activision. And that was definitely kind of a positive, definitely helped on the positive side of things here in the December quarter. We think there is notable upside here, not only over the next 12 to 18 months, but over the next decade from each of those trends. And as a result, this is one of those names where any type of weakness that investors are to see, we would recommend that they continue to pile into the name.
I'm interested to get more thoughts from you on just how hard it is to quantify the sorts of gains that we can expect to see from Microsoft around AI, because one line that's standing out, for instance, is around their expectations for the third quarter for more personal computing, and that could be from $1.47 billion to $15.1 billion. I mean, it's quite a big discrepancy there.
Yeah, I mean, I think they highlighted more personal computing growth of about 11% to 14% year over year here for the March quarter. As far as kind of, this AI potential here over time, it's a little frustrating because I know investors want them to quantify the AI potential here over the next couple of years. And, I'd say the one comment that I can refer to a couple of quarters ago, Amy Hood kind of made a reference that this would be kind of the quickest $10 billion revenue in the company's history. And again, they haven't kind of provided any type of update in terms of what the monetization potential of AI is. But our view is, again, on the cloud side of things, you can continue to see the incremental growth or growth contribution from AI on that side of things. And as you kind of exit calendar 2024, the number we think is going to be significantly above where the expectations are right now as you continue to get more of those GPUs into kind of the cloud side of things. And then Copilot, I think it's just a wait and see kind of thing. I mean, still early days. The company has highlighted the fact that it's going to be more of a second half calendar 24 opportunity and 2025 opportunity, but it's not, for investors that are kind of looking for kind of an NVIDIA type inflection in terms of AI contribution on the Microsoft side of things, that's not the way this is going to work. It's going to kind of be a slower slog than maybe some out there anticipated, and maybe why you're getting some disappointment in terms of the share price, not only for Microsoft, but also for AMD and Alphabet after hours here.
Yeah, I wanted to get your views actually on AMD because, again, yeah, they were pretty optimistic on the outlook for AI chips, but still it's that weak forecast that people really seem to be clinging to.
Yeah, it is the weak forecast. I mean, you kind of look at AMD. I mean, essentially, implies about a 12 to 13% sequential decline in terms of on the revenue side of things. It was better than what Intel kind of guided to in terms of about a 17 and 18% sequential decline. And a big reason for that is because the data center business is holding up. Greater GPU revenue potential here in calendar 2024. On their side of things, they are just now ramping up the MI300. So we remain very excited about that story for the company, as well as the recovery for their overall business. But I'd say as far as kind of the weakness, it is greater than expected seasonality declines because you started off calendar 2023 on a low note in terms of their PC business. Probably overshipped a little bit in the second half of calendar 2023, and you're kind of seeing some of that normalization play out, as well as some of their other businesses like their embedded business. So areas like industrials and automotive also weak. So, a big reason for that. But nonetheless, the secular story remains intact, and we continue to remain very bullish in kind of AMD being that second big player on kind of the GPU side of things, far behind NVIDIA, but still a beneficiary.
Yeah, it is that really big question mark of who's going to win that race around AI, and there is that dominance of NVIDIA, but you've got the likes of Intel that's coming into the space as well, AMD, yep. Both of those results out early this week. And then you've also got those external competitors or those companies that are choosing to go in-house. So how does that sort of weigh into the outlook as well?
Yeah, I think you've got to account for all of that. But, and our view is this is going to be a massive market. I mean, you've talked about, we've heard about, NVIDIA sizing up the addressable market of 300, their TAM in terms of the data center side of things at $300 billion. You've heard AMD's Lisa Su recently at an AI event in December talk about the accelerator market potentially being a $400 billion market by 2027. So it's tough to really say how the trajectory is going to go here or how big the addressable market really is for this space. But when you think about the accelerator space overall, it is big enough for all three of those names that you just alluded to, NVIDIA, AMD, and Intel, to kind of take a slice of the pie. The question is how much of the pie each one of these companies will get. We think NVIDIA will continue to be able to dominate and get 80 to 85% of the share there. And then as far as kind of some of these other companies internally developing their chips, we don't think it's going to be a huge detriment to these other companies. It will kind of act as somewhat of a headwind. These companies have to kind of somewhat manage the cost trajectory of their businesses and investing in AI. So we are going to get some of those workloads kind of go into some of those internally developed chips. But at the end of the day, if you're in the cloud, you need to continue to invest heavily in the most advanced chips out there, because there is a war in the AI in the AI cloud out there. So we're not that worried at all as far as the prospects for those companies that you just referenced.
Well, Angela Zeno, thank you very much for your time this morning. That was the Vice President and Senior Equity Analyst at CFRA Research. And just as Angela was speaking there, we actually had the Samsung earnings that came out. This is the final reading for the fourth quarter here. And at a headline level, we saw a net beat on estimate, or rather net income beating estimates here. So the income coming in at 6.02 trillion won. That's a very handy beat on what the estimate was for around 3.16 trillion won. Operating profit as well coming in at 2.82 trillion won. Sales just under 68 trillion won. So Samsung, as we know, this is the final results. We do get the prelim numbers early in the month that gives us sort of a signal, but it tells us these numbers that chip weakness is persisting, because we're just starting to get that divisional breakdown here, and we can see that for the chips numbers, that operating loss was at 2.18 trillion won. The estimate had been for a loss of 1.7 trillion won. So not really the numbers perhaps that they want to see, given as well those chip sales just coming out. And a little bit of a beat here on estimates, so perhaps that pricing is playing into it, but 21.7 trillion won, a little bit better than the estimate for 20.2 trillion won. But Paul, really these numbers as well playing into what we just got from South Korea in terms of their reporting on the chip exports, chip production over the course of December.
Yeah, we did hear that South Korea does plan to lift its manufacturing capacity in 2024. Perhaps good news for chip prices, perhaps not such good news for those companies that make them in terms of achieving revenues. But South Korea accounts for 2/3 of the global production of chips, so that lifting in capacity should bring down prices there. Also going to be interesting to hear from Samsung in terms of its activity around AI. So we'll be watching for headlines around that. Of course, it's launching its latest Galaxy device smartphone series, calling them the first AI smartphones. Yeah, well, AI has been around for a little while in smartphones, so how much of a marketing gimmick is that? We'll be keeping an eye on that as well. But it's also competing with SK Hynix to sell high bandwidth memory to NVIDIA as well. So plenty of other things that we're going to be looking out for in this set of numbers. But certainly on the headline there, those fourth quarter net numbers, 6.02 won, very trillion won, very, very handy beat, Bell.
Yeah, we're certainly tracking those numbers, but the focus, the company as well saying that it's going to be on profits in the first quarter, and that's going to come via high value added products. So this focus really coming down to that chip operating loss of 2.18 trillion won, a lot bigger than what estimates had been. We're still just getting that divisional breakdown that's coming through here, but the net income, as you said, almost double the average of analyst estimates. So the question, of course, is how Samsung starts to trade. We are getting its short-term priorities as well. As I said, the first quarter of 2024, focusing on improving profitability. And you can also turn to your Bloomberg for more on Samsung. Go to TLive Go to get commentary and analysis from Bloomberg's export editors, Samsung's fourth quarter earnings. That analyst call, we're waiting for that ahead. This is Bloomberg. The IMF has raised its forecast for global growth this year on better than expected expansion in the US and fiscal stimulus in China. Chief economist Pierre-Olivier Gourinchas told us that persistent risks from wars and inflation could change the latest outlook.
So we have 3.1% growth for 2024. That's a 0.2 percentage point increase compared to our October forecast. And there are a combination of factors. We see a lot of resilience in a number of economies in the US, in China, and in many large emerging market economies, Brazil, India, Southeast Asian economies, Russia. So all of this together, that's what is lifting the growth number for this year. Behind this, what we see is strong demand in some countries, private consumption, public consumption, but we also see supply side forces. We see the unwinding of remaining supply chains restrictions. We see energy prices coming down, and we see a lot of strength in labor markets.
Is China, though, a different story now? I mean, given what we've been seeing over the past few weeks, especially when it comes to the property sector, is there a concern?
Well, there is a concern with the property sector. It's a concern that we already had back in October. The property sector has not been doing well for some time now. And what we're seeing is that's one of the reasons why we have slightly lower growth for China next year compared to this year. So we're projecting 4.6% in 2024, 5.2% last year. But that has been revised upwards because we have also, the Chinese government has been implementing a fiscal package that is trying to support consumption, trying to support households and investment. And that is having some impact on growth.
Is it enough, though? Many people are saying that it's not.
It may not be enough. I mean, we are concerned that this is still going to weigh down on output growth in China in years to come. We're also concerned about the more medium-term growth prospects for China. They seem to be coming down from sort of the turbocharged growth we've had in past decades, and that's something that has to do with declining productivity growth, declining demographics. So there are a number of headwinds for the Chinese economy.
IMF Chief Economist Pierre-Olivier Gourinchas speaking there with Bloomberg's Jennifer Zabasajja. Let's take a look at how we're tracking on markets at the moment. The ASX now steadily and rapidly reversing away from that intraday record that we got within 2 points of hitting yesterday as the ASX weaker by 1/3 of 1%. Doesn't look like we're going to recapture that high water mark today. Seeing a bit of softness in New Zealand as well. Nikkei futures also setting us up for a softer open, off by about 2/3 of 1% right now. And S&P E-minis a little bit weaker as well. And it was kind of a mixed day for US equities also. We saw the S&P flat and the Nasdaq giving up some gains there as well. Waiting on some important data out of Australia today. The fourth quarter CPI numbers, they're due out in the next hour. And Bloomberg Economics says headline inflation probably eased by quite a wide margin. Well, let's get more details now from our economics reporter Swati Pandey here in Sydney. So Swati, tell us a bit more about what we might expect today.
Yes, so today is the fourth quarter CPI, which the RBA and financial markets are eagerly waiting for. So we are expecting headline inflation to fall to 4.3% from 5.4% in Q3. And trimmed mean is also going to be 4.3%. So trimmed mean is the gauge that excludes volatility, and the RBA actually really focuses on that one. So both headline and trimmed mean are seen at 4.3%. So it is falling by a wide margin from Q3.
Well, we've got the RBA meeting next week, the first one of 2024, the first one under the new settings as well. It's going to be a two-day get-together. We are expecting them to remain on hold, but what about that easing, tightening bias? Is that going to stay in place?
Yes, so the tightening bias is expected. The new governor, Michelle Bullock, has sounded hawkish, and we are, even though inflation is coming off at 4.3% or thereabouts, it is still way above their target. So 2.3% is their target mandate, and they do want to see it come down. So it is moving in the right direction, but we have seen in some places inflation remaining sticky, and that is the RBA's concern as well. So they do want to sound hawkish.
We're still getting a sense of how we finished off last year, but the early indicators so far, are they telling us that the Australian economy is holding up?
Yes, so the data so far has been a little bit mixed. So Australian consumers are actually bearing the brunt of this the most. We had retail sales data this week, which pointed to a much bigger slowdown in December than economists had anticipated. Consumer sentiment is pretty weak as well, but housing market is going strong. The labor market is pretty solid as well. And while consumer confidence is weak, business sentiment remains pretty okay. So we are seeing kind of mixed trends, and that is another reason why the RBA is not 100% sure that inflation will hit the target very quickly, and that is another reason they are likely to remain hawkish.
All right, economics reporter Swati Pandey in Sydney, thanks so much for joining us. So that RBA meeting, it's going to be a two-day meeting. We're waiting on some breaking news. That was a little bit premature, that flash. We are waiting on breaking news out of Japan. It's going to be retail sales and industrial production for the month of December. But just while we're waiting for that, I'll just remind you that the RBA running off a slightly different setup in 2024, cutting down to 8 meetings per year. Those meetings are going to be 2 days long. And at the end of it, something new also. We'll be getting a press conference from the governor, Michelle Bullock, also. Right, those numbers I promised you now hitting the Bloomberg industrial production out of Japan. This is a partial reading for the month of December. Bit of a miss, coming in at 1.8%. The market was looking for 2.5%. And on year, that's a contraction of 0.7%. So some disappointing numbers there for industrial production. Retail sales just hitting the tape now as well. That is also a miss, expanding 2.1% on year in December, but the market was looking for much more than that, 5.1%. Month on month, that equates to a 2.9% contraction. If we take a look at the yen, not a great deal of movement there, 147.47 against the greenback at the moment. But just to recap for you, a miss there for both retail sales and industrial production in Japan. Okay, you can watch us live. You can also see our past interviews on our interactive TV function, TV Go. There, you can also dive into any of the securities or Bloomberg functions that we talk about. And you can become part of the conversation as well by sending us instant messages during our shows. This is for Bloomberg subscribers only. You can check it out at TV Go. This is Bloomberg.
You're watching Daybreak Australia. Just recapping some of the breaking lines that came out in the last 10 minutes or so. These are numbers for Samsung. The fourth quarter final results just dropping. Now, at a headline level, it was net profit. That was a handy beat on estimates here. So coming in at 6.02 trillion won. The estimate had been for 3.16 trillion won. CapEx as well over the course of 2023 totaling 53 trillion won. Chip operating loss, that was at 2.18 trillion won, but certainly we are getting some sense of perhaps there could be a sort of recovery over the course of this year instead, because we are seeing better than estimated chip revenue from Samsung. Also adding to that were the numbers we actually got out from South Korea's industrial activity data for December, and that told us that semiconductor shipments were rising and also chip production increased in turn. So Samsung, certainly one of the ones we're going to be tracking at the top of the next hour. We also are watching for the market reaction to its smartphone lines as well. It is expecting a rebound over the course of 2024 with chip prices as well starting to climb. But the company saying that its ability to offer promotions and other enticements, that's going to be a little bit limited. Still, though, certainly something to be watching, because we are seeing a bit of uptick in overall global demand, and that does bode well for the South Korean company over the course of this year, Paul.
Yeah, so let's, with that in mind, consider some of the stocks we're going to be watching when trade opens in Korea and Japan shortly. Asia's big tech sector obviously in focus. Alphabet and Microsoft falling in post-US trading, following some disappointing results. And we're going to be watching suppliers of AMD and AI-related shares as well, after the second biggest maker of computer processors gave a weak revenue forecast. And that echoes Intel's downbeat view of the PC and data center chip markets. Bell.
Yeah, well, Paul, just adding to all of the breaking lines, we actually had the BOJ just releasing the summary of opinions from the January meeting. A couple of the headlines to be tracking from this is that they are saying that they will mull the end of negative rates if that 2% inflation goal comes into sight. We have been tracking perhaps a bit of mixed readings coming through, but Tokyo inflation, the latest one, missing what economists had been expecting. Though another BOJ member did say that conditions are increasing for the end of negative rates, and that there is a need to start discussing when to exit that policy setting. A lot of the economists that we're speaking to saying April is the most likely time we'll see an exit away from that policy. More ahead next with the opens in Tokyo and Seoul. This is Bloomberg.